The popular commodity that everybody hates is silver because it's disappointed people so much, so often. Make no mistake, I'm a precious metals bull. I'm looking not for higher prices, but for sharply higher prices. And I think if the narrative, the anti-precious metals narrative, changes to a positive precious metals narrative, which I think it will, I think that speculators will be surprised by the silver market and more surprised by the strength in silver equities, which have been an investor's graveyard since 2020. Suspicion is that as consumers become more concerned about fiat currencies and they become more concerned about the structure of the financial world, that gold and silver will increase in attractiveness relative to other asset classes. Will this happen next week or next year? I don't know. But I'll tell you this. When I look at the proliferation of currencies, including cryptocurrencies, I'm increasingly attracted, and I was already attracted, to gold and silver as a partial store of value for my own estate. I mean, the popular commodity that everybody hates right now, and as you know, Dunnigan, I like hated commodities. The popular commodity that everybody hates is silver because it's disappointed people so much, so often. Make no mistake, I'm a precious metals bull. I'm looking not for higher prices, but for sharply higher prices. And I think if the narrative, the anti-precious metals narrative, changes to a positive precious metals narrative, which I think it will, I think that speculators will be surprised by the silver market and more surprised by the strength in silver equities, which have been an investor's graveyard since 2020. I think in both Canada and the U.S. that the fear of an overt grab for private assets is probably overblown. I think even the Trudeau administration experienced fairly severe backlash for their idiotic overreach around the truckers' convoy. People often ask me when I was at Sprott whether I felt that nationalization of precious metals or nationalization of IRAs was a real threat. I've come to understand, I think, that there are easier and cheaper ways for the government to steal your wealth. One would be through the debasement of currency. The other would be through raising taxes and fees. An overt grab for your wealth through your IRA or through your gold might be met by some Americans with an armed response. If the government were to come for your IRA or to come for your gold through the front door, which is to say to nationalize it, there would be an extraordinary political response and an extraordinary threat. If they come through your wealth, if they come for your wealth by quantitative easing, by inflation, by increased tax, by increased regulation, it's extremely popular with the
you mean
what
they've already been doing for the past century? Yeah.
Yeah, there's no risk to them. So I think that the risk of backdoor confiscation is much greater than the risk of front door confiscation, although I wouldn't put anything past the big thinkers. I can't comment on individual dealers because there's some dealers that are very difficult to bank. You lend against their inventory, they sell the inventory to clients, they take the money and fold up shop, and you as a lender are left holding the bag. That's true in many retail businesses, precious metals dealers notwithstanding. To the extent that reputable precious metals dealers like Miles Franklin experience difficulties with their existing lender, once Battle Bank is up and chartered, I really look forward to competing for that business. Certainly, if we believe that gold and silver held in segregated accounts is great collateral, then we believe that providing selective flooring financing for precious metals dealers is a similarly good business. And we will be on that business like white on rice, Dunnigan. Depends on how you define the banking system. In the first instance, there's no federal deposit guarantee, which is to say that the government won't make good your losses if they occur in PSLV and PHYS. They are instruments that have no countervailing debt against them, which is to say when you look at it as an entity, these trusts have no debt and therefore don't have the threat of leverage and don't have the threat of a bank run. They are very simple businesses. To the extent that we had a broad-ranging financial catastrophe where, as an example, the New York Stock Exchange shut down, something which, by the way, I see very small probability of occurring, then certainly while your ownership in the trust would remain intact, your access to liquidity through the sale of the trust units would go away. I would urge your listeners to think about gold and and silver as a form of liquidity. And I would urge your listeners, despite the negative real yields around holding U.S. dollar denominated cash, to hold some, whether or not they hold it in the banking system. I'm a big fan of liquidity. I regard gold and silver as good, if volatile, liquidity. And I regard the Sprott Physical Gold and Silver Trusts as convenient, low-cost alternatives, as ways of maintaining gold and silver liquidity that don't involve physical possession and don't involve the transactional premiums that often are present in other forms of gold and silver ownership. I don't regard as one as necessarily a substitute for the other. I personally own both physical gold and silver, and I own the Sprott Physical Trusts.